The Hedge Resourceman here. It's August the 23rd. I guess it's August the 22nd still in North America. 2024. First of all, thanks to the sponsors. I also have a new sponsor, Borealis Mining, which I've talked about before, but it's not up here yet. So first, let's just look at this very nice chart. Nasdaq divided by the HU or HUI, as we like to call it, HUI. I've shown this before, especially when it was touching the highs of the 2000 tech bubble or IT bubble, I guess. People typically calls it. Still, I mean, it's not like, again, I don't use these charts like, oh, now I get in. Like it might as well have stopped here, and if I was waiting for an even bigger setup, let's say, I mean, then I would have missed that. That is, in my opinion, one of the absolute largest mistakes people do. Everybody's always waiting for the perfect setup, even though it's like, I mean, again, I have no timing whatsoever. I buy pretty much every month. I bought something since 2015. Never sell. I never have any cash. I mean, the only time I've taken out cash is, to pay taxes, to get into private placements, to buy some physical metals. And it's like, yeah, I feel like buying a bit more physical metals. But my point is that I just look at this stuff for amusement, because whatever this chart, it does not say if a particular company is cheap or not. And that is the only thing that matters to me. If a company is cheap or not. Whereas like 98% of other people, I would say, buy what they think is going to go up in the short term. Buy what they don't think can go down in the short term. Basically everything else other than, okay, what do I think the long-term value is of this company? What's it selling at? Okay, is it lower? Then I, buy. Or I, of course, want to buy the cheapest I can find, but you get the point. That's the only signal I use. This stuff is, again, just mostly for amusement. Some sort of confirmation bias. I said this before. It's like I have no problem looking for confirmation bias if it makes me do the right thing. Meaning that if I bought a lot of stuff, a lot of stocks I think are super cheap right now, but you get fearful, as everybody does. And I mean, the funny thing, which is, I mean, a bit ironic, I think most of us were attracted to gold miners and silver miners because we were attracted to gold and silver. And why we were attracted to gold and silver is because we think the current monetary system is unsustainable and all that. The funny thing is when it starts to crack, everybody kind of gets scared and want to sell miners. And it's like, I can understand that. Yes, we've seen what happens. Like this was the flash crash. Poof. This was the 2008-9 crash. Poof. Had nothing to do really. I mean, gold went down a bit here maybe, but miners went down like 50%. Of course, they shouldn't have, and so when the irrational panic selling was over, it shot up right back up. And 2008-9, yes, this I guess continued for quite a few months, but then it shot up again. So my point as always is that if short-term paper losses or like potential for short-term downside, if that's your main fear, I mean, you're in a pretty good position. If I was in Bitcoin, I would be chronically afraid of it returning to its, in my opinion, intrinsic value, which is probably around zero. And that goes for all the 15,000 cryptos, almost all 15,000 cryptos. I would say that goes for any tech bubble company. Let's say, whatever, when Tesla was trading at 1,000 PE and Nvidia, yada, yada, yada. It's like everything that is overvalued has actual risk to the downside, meaning that they should go down and stay down. If something is overvalued, it's not going to do one of these dips and then just come back. No. Sooner or later, well, if it is undervalued, sooner or later it's going to go up. But if it's actually overvalued, it's like there's no reason for, if this was an overvalued stock and this happened, maybe fair price was down here. So when it actually, the market got rational, there's not going to be any bounce like these. So that's one thing. Still, it's funny that, let's say, the worse things look out there, and the more we kind of get bullish on gold, people get even more scared to hold gold miners. But it's very human, especially if we've had poor performance, we're not used to volatility, we're going to fear any additional paper loss, because losses hurt more than gains give us joy, basically. So everybody's more afraid of downside typically than they are of, greedy about upside. And I'm not immune to that. I am well aware of the fact that if we get a market crash, it probably might take gold with it, paper gold. I'm probably going to take with it paper silver, and it's probably going to take miners with them. The thing is, of course, again, what happens afterwards. So in a sense, if that were to happen and things really, shit hit the fan, I would think that the merit of owning gold and gold miners would go up rapidly, even though price of maybe both assets in the first reaction goes down. So if we just extend that horizon a bit further, should you really be scared? Let's say there's a market crash. Oh, everything sells off. Your miners sell off 30% in 2 weeks. Maybe 50% in a month. Should you really be scared? Given the levels they are at right now, and it's like we don't know what's going to happen with gold, but imagine that some of these juniors, the higher quality ones, would sell off 50%. They would be so cheap that I don't know how to describe it. Especially if gold doesn't really move much, they would just be, from those levels, probably a 10-bagger would be nothing. I think a lot of juniors out there have 10-bagger potential from these levels. Imagine if they sold down. Then we're talking like 20-bagger potential. So the question is that really a problem? Or is the perceived problem really only short-term pain, short-term paper losses, and the regret of like, oh, if I would have been out and could have rebought them at the lows, yada yada. The thing is, of course, assuming this scenario happens, where shit hits the fan, everybody gets scared, everything gets sold. Do you think you would be buying these juniors? I doubt that. Because that fear would be higher than the fear you have right now of short-term paper crash, thanks to a market crash. So when the market crash, etc., actually happens, I think you, I, and everybody else will be even more shit scared. The end of the world things, end of the world feelings. So is it really believable that we let's say if we sell now because we fear some, shit hitting the fan and paper losses, if we sell because of the fear of it, when it actually happens, wouldn't that make it much stronger and it's like would affect us even more? I have a hard time seeing people who are afraid of paper collateral selling in miners right now being, let's say, quote, brave enough to buy in the case that actually happens. I just don't buy it. I think everybody would be so scared, yada yada. So I think what I'm kind of saying is that if you can withstand the fear of that now, you probably could be one of the few that could actually buy if that happens and they go even lower. If you can't hold your nose now, I don't see you buying whatever low would come. I mean, think about it yourself. It's easy to say, oh, I'm just going to rebuy lower, because that's what you hear all the time, especially, I mean, you heard that here. That's why people didn't buy it, because they thought there, of course, would be a lower low. If people had any idea this would be the actual final low, it wouldn't be down here in the first place. Nobody expected this to be the low when it actually happens. And then it just turned around and it went straight up. That's all I'm saying. Be prepared. I mean, I like the idea of, playing scenarios through your mind and prepare yourself, kind of. I mean, be, let's say, comfortable with the fact, and I know that could happen. It's like, there's not a 0% chance that something really spooks the market, maybe going into the election. And whatever, banks just start falling over. The yen carry trade unwinds even more so. And it's like, you see the stock markets down, you see metals down, you see, Fed just pumping out statements, you see all hell breaking loose. Yes, then I can see, of course, that, some panic selling in these undervalued juniors would happen. It's like, okay, you should know, like what Napoleon Bonaparte said. It's like, you should know what to do if the enemy shows up at your front, your rear, or any of your flanks. So knowing that, if you play through that scenario, it's like, and you gotta kind of know beforehand what to do, if you know what I mean. Because if that happens and you're panicking like everyone else, then you're gonna do like everyone else. So the way I would look at it is like, okay, let's assume that happens. Again, from ridiculously undervalued levels, they go down. I know that they're gonna come back with a vengeance, because undervaluation or severe undervaluation that goes to extreme undervaluation never stays at extreme undervaluation. So I know it's just, again, a matter of time before they come back and perform even better than they have since the bottom of or earlier this year. So if you know that, okay, it's a ticking bomb, I was gonna say, that they just all of a sudden turn and go to the upside. So it's like you would immediately go into a buy more mode, or at least value shuffling mode. But if people, again, the ones that, let's say, can't buy it now out of fear of something that hasn't happened, when it actually happens, I think they're not going to think like that. I think they're just going to get more and more scared, and yada yada yada. And the way I look at it, it's like I talked to some that, I mean, again, I share that fear as well. That could happen, but still, the way I look at it is like, let's say that happens. What would you rather own? Would you be happy to sit in cash if all hell broke loose? I mean, as far as I understand, 2008, 2009, people were actually leaving the banks because they feared some would go under, and went into stocks actually during the 2008-9 crash, because they would rather own pieces of a business than own money that the banks owe them. So it's like, let's put it like this, if gold and the gold mining business is not going to be around, then I think everything else is fucked even more. Would you want to be, again, would you really want to own cash if something catastrophic happens? Would you be happy to have it in a bank? It's like, I don't think so. It's like, the only thing I would feel safe in is actually physical gold. Miners are the wealth creation, and it's a derivative of the gold, of gold, obviously, because they have gold in the ground. But let's say, again, something so catastrophic happened, there would be no gold mining sector. Then there probably wouldn't be many other sectors anyway. So if you have some physical gold, I mean that's what some people do. It's like they don't even dabble in the juniors; they only go for physical gold. And most of the time, I think, I mean, I've heard you know, there's some people who are like, you shouldn't touch juniors; they're wealth destroyers and all of that. I mean, in my opinion, that's simply because they don't know how to invest. So if you don't really know how to invest, you cannot cope with the volatility, you don't do enough due diligence, whatever. Yes, junior investing is absolutely, junior investing slash speculation is absolutely not for everyone. I would say for the tiny, tiny minority. And it's like there's people who follow me, and I keep pumping out these videos. I tweet about it all the time. You know, I mean, stay cool, calm, collected, only focus on value. It's got, you know, there's 100% chance that we're gonna have a junior mining rally and all of that. And still, I kind of see the same people come back, you know, every other day or something, and they bring up the same fears. So it's like, I mean, you're kind of stuck in a circle of fear, in a sense. I mean, the idea why I keep bringing up so many topics over and over and over and over again is to hopefully have it sink in, because it's very much exhausting to constantly be, providing copium at all times. It feels like 50% of my day is just think about, okay, what should I tweet so people don't do dumb stuff. And that's, yeah, I mean, it's time consuming, and these videos are time consuming as well. I mean, you kind of have to get it, because, like, let's face it, I'm not going to be around doing all these videos forever. Hopefully, if you know what I mean. Because I mean, I don't know how long this next bull is going to be. Let's say it goes on for 6 years or something. I mean, by that, I would imagine that I would hopefully have so much wealth that I mean, I wouldn't need to have sponsors and stuff like that. I mean, I could, well, actually I probably could retire right now, but I don't want to. But if we get a 5 to 10 bagger in these juniors in real terms, yeah, I mean, then I can for sure retire. The thing is to not make any mistakes. I don't want to mess this up. But yeah, so long story short, think about that stuff. Be prepared. Let's not shy away from it. It's like if we pretend that it can't happen, that there's no way there could be a market crash that take down juniors, etc. Then it's really going to be a shock. But if you understand that, it's like, yes, that is a possibility. But in that scenario, like we saw in 2008, 2009, the COVID flash crash, there's going to be immense responses from central banks and what have you, because every voter is going to be screaming about fix this, fix this, fix this. And what will they do? I don't know, print a lot more money somewhere along those lines? What do you think is going to happen with real assets? So it's like, if the kind of the worst case scenario, barring an the world apocalypse, the worst case scenario is a short-term dip before it just absolutely roars higher, because it's going to be probably an even better environment for gold and gold miners. That's a pretty luxurious problem to have. To like, the worst that kind of the worst that can happen is some dude panic sells my juniors down 30%, maybe 50%, who knows. And then the response after, and we've seen how quickly central banks are when it comes to responses nowadays. I mean, I think they've gotten quicker and quicker in responding to things. So whereas 2008, 2009, they had to come up with a bunch of new stuff like, I don't know, negative rates, MBS purchases, yada, yada, yada. That is all, like, that's the, since then, that's the tools. QE, they've done QE a bunch of times. And as soon as the markets recently, went down, I don't know, 5-6%, all of a sudden they're talking about rate hikes. lowering of rates. So you can kind of see how sensitive the powers that be are to any kind of rocking of the boat. And now they have a bunch of tools that are today readily available, which they probably didn't have in 2008, 2009. So meaning that's probably they're gonna short circuit the crash even quicker. And let's say all they know is printing money. It's like sooner or later, the jig is gonna be up. Because gold is already, as we know, it's already at all-time highs. That doesn't suggest there's no demand. Imagine what would happen if the Western investors joined in. I have no idea what could happen with the gold price in that case. So it's like from a longer term perspective, again, it's in my opinion a no-brainer to first of all have physical, but it's like to have, I like the miners because it's like, yeah, I mean they are the ones that are extremely undervalued relative to the gold price, and I don't see a future where it's like, oh, we're not going to need any gold anymore. We're not going to have gold miners. Maybe the merit of gold is actually going to go up. We're gonna have like I mean gold becoming a more and more integral part of everybody's lives, and you saw that chart I put up in a recent video where you have that miner versus gold chart. It's like, theoretically we're talking like I don't know how many years ahead of miners outperforming. How could that happen? Well, it's not that hard to figure out. Let's say gold gets more and more important. I don't know if you saw the Kreska, that slide where it's like shows percentage of assets around the world that are in gold and gold miners. It's like 1%. In the 80s it was like 26%. Imagine if we go up to 5% of the world's assets being in gold and gold miners. And okay, how easy it is to get a new mine up and running. Imagine that gold demand goes up, or like Rick Rule says, the mean average the last 20 years or 40 years of some ratio of like gold ownership was like 4% or 2%. We're at 0.5 last he talked about it. That's still 4x higher. Imagine that happens, like the real value of gold goes up, let's say 4x. Okay, everybody would obviously want to print or start producing more gold miners, more gold, in response to this increased profitability, let's say, of gold. But that is the problem, especially in the West today. It's gotten harder and harder and harder to bring on a gold mine. And the majors, they are, I don't know, producing millions of ounces per year. Are they putting in millions of ounces in production per year? Absolutely not. Absolutely not. So it's like there's just I don't know how many large gold projects in the West are kind of ready to go, could be in production if they wanted to, starting today. That can't be too many. I mean, I've heard Barrick has problems even in Nevada of getting their 4-mile permitted. So it's like, where's the response going to be from? Have you seen many gold miners right now with gold hitting new all-time highs, going up to 2,500? Do you see many gold miners it's like, oh, now we're going to, go for growth? No. We've seen the Goldfields by Cisco Mining. That's about it. And that's been advancing for quite some time. Okay, so that's one gold mine. Okay, good. They can produce maybe 300,000 ounces in a year or two, starting a year or two. Where are the rest? That's the thing. So, I mean, is it impossible, given that so few mines get into production to replace the old mines, that actually the gold mining business, for the few mines and miners that actually, especially the ones that are able to get into production or are into production, that they might have a very good a very good decade ahead. I don't think that's unreasonable at all. And let's again say shit hits the fan and it's like, oh, gold comes back and you have some currency crashes and all of that, and you're literally printing you're producing gold, you own gold in the ground. So it's like, no, again, if all of that becomes worthless, then we have bigger problems, I would say. Even when the US confiscated gold, I mean, they didn't confiscate the gold mines. As far as I remember, the gold mines kept producing. It's just that they sold it at a fixed price, and that then later on that was actually increased. But there's no guarantee that that will happen either. I just have a hard time seeing that. Oh, we're gonna just nationalize every gold mine, if you know what I mean. Is it impossible? It's like, who knows? But again, at that point in time, it's like, at that point in time, anyone's gold is probably going to be up a lot. And it's like, if they do that, what has happened with all the other paper assets? What's happened to the economy? What's happened to the average stock? I think they would be cut to pieces at that point in time also. So I just don't see what's the. I think Trader Ferg actually talked about that. It's like he's all in commodities because he doesn't want to be in anything else. It's like he doesn't want to be in cash. He doesn't, want to be in stocks that are feeding off a debt bubble. Gold is like the antithesis of a debt bubble. When the debt bubble dies, that's when gold really shines. So it's like, the end game. So I'm prepping for the end game. And again, yes, I could just buy gold for everything, I guess. But it's like, hey, in that scenario, I don't know how much it matters that you have everything in gold. I mean, then we're talking, the Middle Ages, kinda. So I think some of this stuff is kinda, interesting, but in reality, it's like, well, what do you expect to have happened if all the gold companies, all the silver companies, they simply disappeared? It's like, I don't think we're going to be worrying about our stock portfolios in that case. And if it doesn't happen, well, they're super cheap. And maybe it simply will become a future where gold and silver revalues. Anyone who has gold and silver miners, the business value of those operations will simply go up. Why is that impossible? I don't think that's impossible at all. But yeah, I mean, it would be kind of funny. It's like, okay, this proved to be the peak, and then it was a 11-year bull market in gold and gold miners. 11 year of zigzagging. I mean, there's a lot of consolidation as always. This was an entire consolidation, higher, retracement, and it kept going and a new high. But still, that was 11 years. And we hit the same peak. Now it's broken down. Fake breakout, kinda. And it coincided with the time when probably gold miners and juniors were the cheapest ever. So it makes if one wants to find a reason for a low, that would be it. It's like it's never been cheaper, perhaps. Anyway, so gold is doing fine. And I've probably said it a few times. I don't know how many bull and bear legs have been declared over this time period. It's like, we're gonna go here. Oh, it's gonna break up there. Oh, we're gonna go there. Oh, gonna break. I don't care. It's like, who cares? You see it immediately today. It's like, oh, gold is off 1.2% from all-time highs. The funny thing is, I actually think quite a few juniors kind of held in there because the markets were kind of, they were doing really quite poorly at least, and commodities were down, or gold was down 1.2%. Typically if you have gold going down 1.2% with the markets going down, it's like, I wouldn't be totally surprised if the average junior was down 5%. It felt like it kind of regained strength at the later part of the day. Not for every junior, obviously. And of course, like Ross Beatty says, it's totally meaningless what gold does today for most juniors. Most juniors have a gold project that might be in production if they're able to find one it doesn't even go that far. Maybe 2028. But they still move based on what the gold price does, today, August 22. It's crazy, but that's the market. That's how short-sighted the market is. That is how it always works. If gold goes up today 1%, which doesn't really affect any gold junior, especially exploration company, at all, they still go up. If gold goes down and doesn't change the value of the business at all, it goes down. That is the market today. That is a momentum-driven, short-sighted market. And that's obviously what we're supposed to take advantage of. Let's jump into some news. I talked about Altamira's news on K-Report. Altamira Gold discovers new porphyry outcrops 1.6 kilometer east of the Maria Bonita discovery within the Cajuero project. So this is quite interesting. I mean, they're finding, first of all, Richard Silito, the world famous, he's like Mr. Porphyry. He concluded that, yes, Maria Bonita is a porphyry. Okay? Porphyries tend to show up in clusters. Okay? So they hired a bunch of consultants, and reinterpretation of proprietary detailed aeromagnetics and radiometrics acquired by a predecessor company was carried out by Geophysics 1 of Ontario, Canada. The results of these two new studies were combined to produce an interpretive district map to guide further exploration. So this is kind of the prospective corridor as they see it. That, okay, the consultants, like, okay, given geophysics and, you know, whatever, faults and shears or breaks in the crust, whatever, that's like, okay, we believe there's like a kind of west to east or east to west perspective corridor where we believe, okay, this is probably where more porphyries might have come up. Maybe it's, you know, a weak crust at that place where these, you know, blobs came out from lower down, and it was easiest to get up here. Let's, I mean, again, I'm not a geologist, but that's the important thing. They believe this is the prospective corridor. And then we can see that then we can also see that, okay, if this is the prospective corridor, well, here you have Novosonios, which has a soil anomaly on top of it, or nearby it as well. Here, ACA, I think that's one of the consultants as well. So they believe this is a target. I believe this is a, you know, magnetic low here, for example. This is Maria Bonita porphyry. So this is kind of a relatively magnetic low. I mean, if it's exactly here, you can see it's not dark blue, but it's like teal or something. Over here, you have a target, but you still see these alluvial gold workings. They're also trending, at least in this area, they're trending west to east. Who knows, maybe there's a parallel structure here. But the interesting thing is like feldspar porphyry. So here's the Maria Bonita, which is a porphyry. That's where they made the discovery. Here they're finding feldspar porphyry. And here you have a big fat, I think this is actually feldspar porphyry as well, or if it's historical alluvial gold. I'm not 100% sure. Can I zoom in and maybe see? Okay, yeah, it does look like alluvial gold. Okay, so presence of gold, people mine gold there. But that's a pretty big geophysical blob, high magnetic. And if I looked at, can I actually find that? Well, this is, okay, I might be able to find it. Point is, okay, here's the Maria Bonita. What the hell is this? What the hell is this? Who knows what this is? What is this? I mean, if you can see, it looks like a gravity low. So is this also, you know, an intrusion, a porphyry intrusion that's come up, and it has a, you know, this circular feature? Is this a porphyry, but it's closer to the surface? That's why the readings are higher, etc. It's like, I don't know. I don't know. But now, knowing that this is a porphyry, it's like, okay, how do porphyries show up? Okay, we hire a bunch of consultants. Okay, they interpret. Okay, where would you expect to find porphyries? And then they reinterpret geophysics based on how would porphyries look. And then they go out and they find outcropping porphyry 1.6 kilometers away from Maria Bonita. So the question is like, what the hell is this? Is Maria Bonita just I don't know, one part of a much larger porphyry blob? Are there more porphyries around here? What is this low that is draining gold? Here they find something. Again, I think there could be targets both at lows and where you see highs here. I think they're like... Why can't I? Let's see if here, for example, I think this is... Okay, so here you have the best so far. Projection of MBA 29, 212.8 meters, 0.8 grams per ton gold. That's huge, including 146 meters of 1.1 gram per ton. I think that kind of started at surface. So this is where the hole started, and they drilled it like this. Here's the magnetic lows. Here you can see there's like more kind of, I mean, higher readings at least. There's like, I think, or the yellow one, okay, stage 2 drill holes. But it's like, okay, 101 meters or 0.3, that's still where you have a bit of higher readings. Here you have 7, 0.3, not too much to write home about. 76 meters of 0.2, 55, okay, this is 55 meters of 1 gram per ton, which is very good. Was this drilled straight down, I guess? Yeah, okay, so I mean most of these were drilled straight down. 41 meters of 0.4 here you have 71.6, so it's like, I mean, it kind of looks somewhat that maybe the high readings here is where, is correlating with the gold content. Then it, in my opinion, becomes a bit more interesting that that you have these very high readings. And I'm gonna try to see if I can. Oh yeah, well, I got to the same slide. That again, okay, we're hitting this stuff here. It looks like it, I'm not gonna say trending. Did I? Okay. I mean, is this kind of thing trending over here? Although here I don't think they hit that high of a grade actually. Still, I mean, it's still early stage. They're just finding this stuff out. But I'm kind of excited about it because I think you can permit a mine here. They have water and the power lines and roads nearby. Brazil is kind of, I mean, there's been quite a few companies that have put mines into production, and this should be, I mean, the near surface stuff should be super cheap to mine, and they have 700,000 ounces here around 1 gram per ton, and of course they have all the, it's not only the Cajueiro project. So here you can see some of the soil anomalies. So that would be, I mean, the big blob I imagine is around here somewhere. And you can see, I mean, something's draining here, something's draining there. Maybe, I think the news release talks about, that some cover, I mean, there's cover soil, and that could be barren, and that has happened at a few places Maria Bonita as well. So it doesn't necessarily mean just because you don't find any high soil readings, that doesn't mean that underneath the cover, the gravel cover, that there's not gold there. But here you have the Novosonios, for example, and this is a kilometer scale bore, so that's obviously quite big. And then you have Sosego. So there's a bunch of stuff that they haven't even gotten to, but it kind of maybe makes more sense if this is an area where you actually have near surface porphyries. So imagine that. I mean, that's like the good old days where, I was going to say Chile and Peru, where you actually got these. I mean, nowadays, like with inflection, we're drilling very deep. But if you can find some gold copper rich near surface porphyries and have a cluster of them. It's like, yeah, I don't know what's going to come out of this, what Altamira is going to end up finding, but I think this is getting very, very exciting for I think they're 25 million market cap. Sooner or later, they're of course gonna need money, but I would think that there are some majors that are definitely looking at Altamira. And here you can see the other projects. I mean, this is huge, 60 kilometers. I hope they have the Apiacas. Oh yeah, here you can see. I mean, look at all that gold content. And do they have the macro picture? Here they have limit Uruina belt. So I mean, you can see, okay, this is a belt that stretches, I mean, basically between here. You can see the limit here and the limit there. So who knows? Maybe for some reason there's like, because they also talk about, or have talked about, that Apiacas, well, they talk about it in the same news release now that I think about it. I think. No, maybe it was the previous one. Yeah, probably was the previous one. Cajuero, Maria Bonita, Casabranca, yeah, Apiacas. Disseminated gold mineralization in intrusive rocks. So I'm not 100% sure, but I think they're saying that this might be porphyry as well. I mean, it's intrusive rock at least, and there's again a shit ton of gold. Where is it? Here. This is a 40-kilometer scale bar. These are alluvial workings. So it's actually there are much more alluvial workings over at Apiacas. Maybe more garamperos or artisanal miners have been here. But it's like, what is explaining this incredible gold shedding? Is it a porphyry belt that just goes straight through here? I don't know. But for sure the scale is huge, and I would say the blue sky upside for Altamira is huge. Of course, that requires, I mean, this would keep could keep a major busy for quite some time. So that is like, you know, the curse of being a junior. It's like you have more potential than you can readily prove up. Anyway, I like this. I mean, they at the bottom line, they have Aura Minerals as a strategic investor. Came in the last placement. That's around the $1 billion gold company in Brazil. Vote of confidence. They have 700,000 ounces in the ground already. In a resource. They have the Maria Bonita discovery, which they've only kind of scratched the surface at, and now they're finding that, hey, there might be a lot more. There might be other porphyry targets here, so there's no shortage of targets. So I don't know. I want to see what they can find here. That's for sure. I want them to drill deep at Maria Bonita. I want them to see if this is tied to Maria Bonita. Is this just one fat porphyry here? And Maria Bonita is just I don't know, you know, the remnants, the finger of one of these things or something like that. Next, Headwater provides exploration update on its partner-funded portfolio of projects. Spring Peak drilling, a multi-rig drill program is underway at the Spring Peak project, earning with Newmont approximately 2.5 thousand meters and of up to 7,000 meters of planned drilling has been completed. 5 drill holes have been completed with 3 additional reverse circulation pre-colors cased and pending completion with diamond core. The program is designed to follow up on high-grade epithermal vein intercept as well as stepping out testing new target areas. Spring Peak and Lodestar Regional Exploration Program district scale geophysical surveys have been completed over Headwater's recently expanded land position, including gravity, magnetics, and radiometrics. I mean, they're using all the tools. Reconnaissance rock sampling on Headwater's newly acquired ground has identified large areas of epithermal vein float. Large areas of epithermal vein float. Initial sample results include 6.7 grams per ton and 3.2 grams per ton from banded epithermal vein float. Follow-up sampling and geological mapping is underway. Midas North and Mahogany, the companies received notice that Newmont has declined to continue exploration into phase 1 of the earning agreements announced on August 16 after having met the minimum commitment required expenditure on both. That was, of course, Newcrest that did those deals. Newmont took over that responsibility, minimum earning. The projects reward to Headwater on a 100% owned and royalty-free basis. A 2024 field program at Midas North is planned and will be executed by Headwater, including additional geological mapping and the completion of a previously planned soil geochemistry survey. No further work is planned at Mahogany. Kind of good and bad, depending on how you look at it. I mean, I think they have a huge land package here now. That's the funny thing. Is like, I'm invested in Borealis Mine, or Borealis Mining, who now have taken over the Borealis mine. McEwen and Sprott are in here. You have Hecla here, and they have a plant here as well. And then in between, you have Headwater's expanded land position, which is, how big is it? Okay, they don't have the measurements, which Newmont is funding into. So it's like Hecla, Newmont, McEwen, Sprott. This could be quite an interesting place in Nevada, I think. Newmont obviously is not continuing with Spring Peak and Lodestar if they don't see $3 billion potential or something like that. I mean, Newmont has a market cap of 80 billion. Newmont has an market cap of 80 billion. They wouldn't give two shits about $1 billion potential. $2 billion potential, they probably wouldn't give two shits about either. Now they're probably up to minimum $3 billion potential. And Spring Peak is a discovery. And now I'm assuming, Spring Peak claim expansion. So I'm assuming they're finding gold-bearing vein float, epithermal vein float up here. They've already hit at a bunch of places down here. And they have, do they show? Okay, they don't show all the targets. And this is Lodestar, which is also going to see approximately 3.5 thousand meters of drilling plan for 2024. So this is where Newmont is carrying on from Newcrest. That says something. I mean, personally, I think Headwater is super cheap just based on the Lodestar and Spring Peak projects. I think you get all the other projects basically for free. And again, if Newmont decides to keep going, they think there's multi-billion-dollar potential here. Why? Simple. They have an $80 billion market cap. They're not looking to find something worth $1 billion or worth 1/80th of what they have. It's meaningless to them. Their stock goes up and down 1 billion within a single trading day, or more than that. I think it's almost irrelevant, something that's worth $1 billion to them. And Headwater has a market cap of 12.7 million with 2.5 million in the bank, so an enterprise value of 10 million. And you get 11 projects, including one where a district scale land package where Newmont is funding it. And of course, some might look at it like, I mean, the funny thing is that I think the stock went up on the day of the news. So that's kind of interesting. Maybe that's because people are like, oh, you know, there's or as people see, there's more torque if you own it 100%. Okay, Mahogany, no further work is planned at Mahogany. Okay, maybe Mahogany, out of the 11 projects, that's one that's like, okay, we're not sure about Mahogany. Maybe we didn't see encouraging enough signs. Midas North, they actually hit some silver and stuff in those holes. And they did, I think, 5 holes or something. the odds of them getting an economic intercept would on a blind scout drilling or semi-blind. I mean, they only have geophysics really. That's got to be super low. So the way I'm reading this is okay. Newmont, like, this is so early stage. This is so early stage. Again, we're three or four times the size of Newcrest. Whatever. It's like it's probably not worth our time. That's how I view it. Especially since they're saying that they're gonna continue to work at Midas. But that still means, I mean, it kind of shows even more then that they're not just half-assing, just we'll throw some money at it. Whatever project that speaks or that makes Lodestar and Spring Peak Discovery look even more enticing. I think, and I mean, it's been super cheap for ages, basically. But they're fully funded on Spring Peak and Lodestar by Newmont. And who knows, maybe everything depends on sentiment, kind of. If it was easy to get access to capital and people cared about discoveries, cared about the fact that they've already made discoveries over at Spring Peak, and it's like, what is this, for example? Are there parallel structures? What is this? They're going to be drilling this as well. I mean, is this another one? Is this kind of one of those fork things? Where do they have the... Okay, they don't have the epithermal model anymore, I think. Okay, I thought they had it in the slide still. Okay, maybe not. Anyway, I mean, you don't have to be a rocket scientist to just figure out that Headwater is cheap, and it's a sentiment thing. I hope Spring Peak and Lodestar turns into a Newmont-sized project, because then Headwater is gonna go through the roof one day. But I also wouldn't mind, let's say, the market is starting to turn around, they get free carried here, and then, they do some work at TJ or Midas North, and they make a discovery, and then it's 100% owned, and people actually care, and people love Nevada. And in that case, it could get quite interesting, because I mean, the Midas mine was worth a fortune. Aurora mine was probably would be worth a shit ton today as well. So yeah. I mean, again, you don't have to be a rocket scientist to figure out that stuff is cheap. Just the fact that Newmont is here makes Headwater cheap by default, and that they have 10 other projects or 9 other projects that are 100% owned. It's like, yeah, if you like exploration and big prices for a $12 million market cap company, or 13 minus 2.5 million in the bank, I mean, yeah. So it's like I've held this stock for quite a long time. It's held in pretty much every HODL portfolio, I think, because again, it's cheap. Those are the only reasons I buy or sell something. And it's hard, I think, to find something cheaper than this. And I'm not the biggest exploration guy right now. I've talked about this. I kind of prefer beta, but this is just obscene, I think. Super tight share structure, 34% inside ownership and stuff like that. Super smart people involved. Yeah. I hope this. I hope they have great success from this year at Lodestar and Spring Peak, and people start to wake up and price in at least a few percent that, oh shit, maybe Newmont actually knew what they are doing and the potential that they see. I mean, it's a possibility. Okay, let's see here. This is a new interview with Homerun Resources done by Valpal. Valpal is run by 2 young Swedish guys, very smart guys. I would recommend anyone that cares about Valpal to listen to this, or that too, but Homerun, I was gonna say, very extensive. I haven't had the time to listen through it yet. Homerun has, corrected from its all-time high and all that. So I mean, if if you liked it at $2.5 per share, I mean, and maybe you don't own any or something like that, maybe $1.5 per share is like, as far as I can understand from the forum, it's like, I mean, it seems that everything is on track, and things might even get better. Maybe some stuff is actually postponed somewhat in terms of timeline, and you know how impatient the market is. Like, oh, a company making news release, oh, we want this month. If it's next month, then it's like, I'm gonna sell because I can, quote, get rich quick somewhere else. So yeah, that's probably a good listen. Goliath closes to $1 million order from strategic Singapore-based global commodity group and other high net worth investors, totaling 5.4 million in the first tranche of previously announced non-brokered private placement, up to 6.5 million. So yeah, I mean, that's about it. I mean, they soon have 6.5 more million to just keep drilling with their 3 drill rigs. So I don't know how many holes they're gonna have done by before the season is over, but we know that, I mean, I think they have 5 holes last we heard with visible gold intercepted, and all of those assays remain to be reported. They announced one interval, the Bonanza interval, over 6 meters in one of the holes, but there was a visible gold zone in that hole that has not been assayed either. So who knows how many holes they put into this stuff. And it's like, let's say they do somewhat close space drilling. It's like, I mean, it could get pretty fun if they come out with like, I don't know, 30 holes before the season is over with visible gold. I mean, again, I'm not using this as some kind of TA, but I mean, you can just look at the chart that some people are getting excited. That's for sure. So will this be their breakout year? I don't know. Maybe if one whatever, that's like, okay, here you have some kind of trader support resistance zone or whatever, and it's like, okay, I mean, this is not a huge jump, 1.3 to yeah, I mean, that's nothing really. Excuse me. That's nothing really. So who knows? Maybe it will just shoot through this potential resistance zone, let's say. We'll see. But I think a lot of things could change this field season. How people view the project. Yeah, Homerun. Yeah, this was the interview. I don't think that's anything. I did want to touch on Integra Resources again. It's like, I have some problem sleep. Oh, wait 1 second, actually. I'm gonna fetch some water. It's hot as hell here. It's good to stay hydrated. So yeah, I was saying that I have. I literally have had problems sleeping the last week, especially because I just lie awake and run through all the different juniors. I mean, I'm almost going insane from all the opportunities out there. And I know some people's like, yeah, I mean, people have been talking, especially me, like talking about opportunities for the last 1-2 years, and it's like, yeah, they've gone down. That's the thing. It's like an opportunity doesn't mean that, okay, it's an opportunity if it goes up tomorrow or next month or even next year, for example. We had no reason to believe that they would get this cheap, given that gold actually, went above $2,000 and all that. So this is just a market that was irrational a year ago, 2 years ago, but it's like just gotten increasingly irrational. Now it's, I mean, again, if you listen to the billionaires, they have never seen anything like it. That Jeffrey Christian, or whatever his name is, from CPM Group, I mean, he said this is the worst sentiment he's seen in 33 years. Meaning, if you translate it, it's like people have never been willing to sell their shares, sell their part ownership of businesses in the gold space this cheap in 33 goddamn years. You can't, it's like, that is why I can barely sleep. It's not because I am afraid of some market crash, or that's like, oh, I'm so worried about my juniors that are not going up or anything. No, this, I'm stressed because I know we should not expect to ever see something like this in our lifetimes again. That is what is stressing the hell out of me. That this is an opportunity that might come every 33 years or 40 years. I mean, I don't think it was this much of a layup discrepancy, price of gold units to gold. I think this is probably cheaper than the 2001 bottom, which then was followed by 11-year bull. I think this is the most insane thing ever. The 2015 bottom, the juniors were selling for very low prices, but their projects were worthless at face value. Now, if you look at any gold developer with a PA study or PFS study out, if you put in the spot price of gold, their projects are probably worth over 10 times what they're selling for. Okay, the absolute best might not, let's say, Rupert Resources, for example, might have a market cap of 750 million or 800 million, and at spot price, maybe, I don't know, their projects are worth 3 billion or something, but still absurdly undervalued. Not pricing in their flagship project, really, especially not pricing in any kind of exploration potential. Okay, sure, Rupert might not be the company with the most exploration potential, but you get all of that for free. Free optionality and huge margin of safety. That's the crazy part. And you see this stuff everywhere. So it's like, I don't have a problem finding something that is super cheap, meaning, okay, I would be happy owning this. I expect to make money on it sooner or later when sentiment returns. And sentiment always returns. So it's like, I see it as a rigged game in our favor at these levels. It's just a matter of time when these juniors are going to be up a lot. And what's stressing me out is that this might never occur again for the rest of my life. Not in this space, at least. Not in the gold junior space. And again, what I'm deathly afraid of is like messing it up, being in the wrong companies. Well, I don't think I'm in the wrong companies, but it's like, you want to, again, if you think you're never going to see this again, you can never come back to a point in time like this where, let's say, money invested would have higher expected future return than now. Of course, you would also want to be, perfectly positioned in a sense. And that's very hard to do because nobody has a crystal ball. The cheapest story out there, something might happen and you won't end up making money on it. A story that is not super cheap perhaps might be the best performer. Nobody exactly knows what's going to happen. But if you have a diversified portfolio where it's like everything you own are no-brainers, it's like that portfolio, again, if that portfolio ends up losing your money over time from these levels, then I think we have bigger problems to worry about. But so anyway, so I got thinking like even more about Integra, and I've talked about this. Well, I've talked about them before. Just how crazy it is. I mean, they have a market cap 140. I think they have one second. Okay, Integra completes. I'm not 100. I think the market cap is going to increase because I don't think these shares are reflected. They were done at $1.35 per share, which is higher than the price right now. So that's going to net them, 20 million Canadian. I think they said they expect to end the year with like 22 million USD in cash or something, which is like 30 million CAD. So I think they, right now, after this closes, if we assume the merger closes, I think they might have a market cap maybe 200, maybe 240, 250 million, maybe, but a lot of cash. Let's say 35, 40 million in cash, somewhere along those lines. So an enterprise value, I don't know, maybe 210. The thing is, at today's gold price, the Nevada North project, for example, Florida Canyon project. This is comes from the Florida Canyon company. Where is here Florida Canyon? So Florida Canyon. I thought they. Oh yeah, here. Base case gold price of 2,200 in 2024, 2,150 in 2025-26, and 1,900 in 2027 plus. Flat silver prices of $20 per ounce. Gold equivalent using yada yada yada. After tax base case of US 128. What's that like? Maybe 160, 170 million. I mean, imagine gold price. Well, you don't have to imagine. Gold is right now. Anticipated. Yeah, gold price right now is $2,500. What if gold price goes up? And their cost, yes, it goes up a bit 2026, and then all-in sustaining drops again to, well, I guess 1,500, a bit above that maybe, and they're producing 74,000 ounces. Let's see. I mean, okay, let's say gold price stays at $2,500. So 2,500 minus 1,500 times 74.2 thousand ounces. Oh, Jesus. Oh, yeah, I mean, why did I need a calculator? That's 74 million US, all-in sustaining margin. That's pretty crazy. That's just from Florida Canyon. You could do a lot with that kind of money. So I think this is extremely interesting if we believe that, yes, gold has broken out. Gold is going to continue up for maybe the rest of the decade. Because at face value, someone posted a technical report and it showed that the NPV at $2,500 gold for Florida Canyon, meaning like right now, if gold prices stay here in this area, it would be worth more than the combined market cap of the merged entity. Meaning right now at face value, you get Delamar, you get Nevada North, Delamar Oxide, Nevada North completely for free, and you get all the exploration projects for free, and that includes obvious exploration potential around Delamar and Nevada North. I mean, Nevada North is super easy to see. Oh, by the way, they think there's more ounces at Florida Canyon as well, because this has basically not been drilled really. And Delamar has, so Delamar heap leach. This is 42.5 million tons indicated. That's put in, or in the PFS, that's stated as a cost, meaning they were simply gonna, move that material. Now they're in the feasibility, they're going to include this. So this is going to go from being a cost in the PFS to being ore in the feasibility study. And this is already been crushed and all that. So basically, I think you just truck it to a heap leach. Should be pretty good economics. Nevada North at $2,000 gold, 490 million NPV 5. So that's what, 700 million Canadian? Almost 3 times the current market cap of the merged entity, and that's a $2,000 gold. 54% IRR, and there's obvious exploration potential here as well. The green is the resource, and here you can see a bunch of other soil samples, and there's some cover rock as well. I mean, this is basically a bunch of exploration potential here. Here you have basically this entire area, and then you also have the feeder target. So the beauty with this transaction, I mean, again, if they can just keep mining Florida Canyon, you know, have according to, let's say, the technical studies, like no miracles, but it's like, yes, it's not a low cost mine, but they deliver along expectations, and gold stays at these levels or even goes higher, they're gonna probably get more cash back from Florida Canyon than the current market cap, and that cash is gonna go into all the 3 projects, expanding Florida Canyon, expanding Wildcat, pushing them forward in terms of de-risking and permitting for Delamar, and yeah, basically that. So it's like I did a few rants. It's like, yeah, I've been thinking a lot about Integra recently. At spot price, Florida Canyon is worth more than the combined market cap on paper. Florida Canyon has some obvious exploration potential. We could add a few years more. The cash flow ought to make the whole venture dilution free for X amount of years, while also increasing value in perhaps all 3 projects. Meanwhile, Nevada North looks to have obvious exploration upside literally beside the resources. Delamar has 42 million tons of material that will go from a cost in the PFS to a value add in the FS. So I mean, this is some of the most absurd stuff I've seen as a value investor. I mean, don't get me wrong, again, there are super cheap developers out there. Rupert, for example, yes, it's 800 million market cap or something. 856 million market cap, and it's a bloody good deposit. It's selling for way less than the prices or the face value is for the deposit, and that's the current deposit. If they get Orion's ground, that's going to be worth even more. So it's like, yes, it's selling for maybe at spot prices, maybe, I don't know, 30%, less than 30%, I think, of the MPV, especially the expanded project, probably, yeah, less than 30, maybe 20, 25, so yes, ridiculously cheap. But at face value, with Integra, let's say you're paying for Florida Canyon at spot price. But then, and that's a mine that's in production, so the current gold price is very relevant, obviously. That's the de facto value right now. Yes, you're not buying it on the cheap. Well, actually, you're buying it on the cheap because the NPV at these prices is above 300 million. But okay, so let's say at spot price right now, you would be buying Florida Canyon for less than Florida Canyon is worth. But the big thing is that you don't get 1, but you get 2 material development projects. One is a multi-million ounce system that could grow a lot, located in the US. Another one is in Nevada, which already has some, 700 million in NPV at today's, at $2,000 gold. So it's like, that is hard to beat. It's like Rupert is cheap, but to be able to buy at face value, you get 2 advanced development projects in Nevada and Idaho for free. That is obscene. That is absolutely obscene. Yes, again, you're stealing the Icary project at these prices, sure. But you don't get 2 projects for free and paying up for, a mine that's at these prices is worth even more than the market cap. And BD, I think this is I don't know, I've heard his name before, so apparently he's it's a very rich person. So I find that pretty good to see. He's throwing $700,000 into it. I think he actually might have shares before. Well, here he has, bought 1 point. So, and here it says he has 6.2 million shares. So I don't know. He's probably in this quite deep. So you have a big, deep-pocketed, I would think, is smart money that's backing this, and that's obviously great. So yeah, basically this is kinda why I was just running through the Integra case in my head. It's like, I mean, for a time there last night, I was like, oh, if I could, maybe I should put 25% of my net worth in this. I can't, and I'm not going to, but I've been having quite a bit of shares. I actually had to sell some shares I've added in other super cheap developers the last few weeks, because that's how I operate. Again, the value shuffle. I just had kind of an epiphany. It's like, well, they are all cheap. I think they're all buys, but this might be actually the better than the other buys, because again, I have not seen so far where you're able to get 2 bloody soon to be a miner that's selling for less than the mine is worth, and you get 2 even better, bigger and better projects for free. I mean, it's kind of ridiculous. So, and the share price hasn't, I mean, the merger hasn't closed yet, so I guess maybe some people are waiting for that. And of course, like always, I think the Florida Canyon spin out and all that went kind of quickly, so maybe, there's shareholders like, well, I owned whatever, was it belonging to Magino or something? I think that an Alamos bought the whole thing, so they got Florida Canyon from what were they called? Magino was the mine. Argonaut Gold. So it's like, you never know. People might like, okay, well, this is not for me. I don't know what this is about, so I'm just gonna sell. It's like there's a bunch of stuff like that going on all the time. I think the market is not appreciating at all what kind of a perfect storm this could be for Integra. And they even showed that in the slide. I mean, their evaluation potential. So they have, I mean, just look at the production potential, for example. And yes, this is, over the next few years. But again, it's like my goal is to get 50% per year over the longer term. They can certainly do that, I think. Certainly do that. Consensus price to NAV. And again, it's like they have some ways of pretty easily, I think, increasing the NAV and doing dilution free, because that seems to have been the problem with Integra, as you can see. That a lot of people like the Delamar project, and this company at the end of 2020 it traded for 217 million CAD market cap. That was when gold was, I think, sub $2,000, and they only had Delamar, 4.2 million ounces, which was obviously less advanced because that was like, 3 years ago. So a less advanced project, 4.2 million ounces, at lower gold prices, the market gave them a market cap of 217 million. That's close to what the entire 3-part merged entity will be trading at if this merger also goes through. That is absolutely bananas, because there is no reason to say that Delamar is worth less than in 2020. one could argue that it's worth a lot more because it's more advanced. It's gone through more permitting. It's closer to production. Gold has gone even higher. And now they have the Nevada North project. And now soon they will have actually be a cash flowing producer. Plus you have, I don't know, 8 exploration projects or something that obviously you get for free as well. It's just the most remarkable, and obviously the cash flow that is generated for a hopeful cash flow from Florida Canyon, that's going to be used to add value on every single project. So it's like you might get the re-rate from this becoming a producer, a kind of, high torque producer because it's a high cost mine. So I mean, if gold goes up to $3,000, I mean, Jesus, Florida Canyon might, I don't know, throw off half the current market cap in cash flow every year. It's just absolutely crazy. And then again, they could make bank on that if that happens. And all of that will get fed into 2 much larger projects that's just going to add value and de-risk it. So when they hopefully come online, it's like a three mine producer with a bunch of exploration projects. So it's like the return on investment from the cash flow from the Florida Canyon could be really, really great. And non-dilutive, because again, I think that's why this got slapped so hard, because the market always knew, okay, they need to raise soon, so we're just gonna crash the price, offer them money, okay, and they probably, like what typically seems to happen, they short it going into a financing, and then they redo it. So yeah, I mean, this is the kind of stuff I was gonna say you live for as a value investor. It's not that it's risk-free. It's not that Integra is risk-free. Stuff could happen with Florida Canyon. There could be, who knows how smooth the permitting goes for the other 2 projects. But at face value, again, I think they will get Delamar permitted in the future. I think Nevada North probably is going to get permitted in the future as well. I think this company could grow from the 10.2 million ounces they have. And I think Florida Canyon could grow. And imagine going into a bull market when you have, like, I don't know, 11 million ounces of near-term production. Yeah, it could get absolutely crazy, I think. So yeah, no, this is just, again, it's like, this is the stuff I love. It's like when everything kind of clicks and you're like, holy crap. Oh, here, the Jardines buy rating with a target price of $4. No, it's just absolutely crazy. This is the stuff I really like. It's like you think about, because personally it's like I wouldn't own Florida Canyon if Florida Canyon was a standalone entity. It's like, relatively short mine life, high cost producers. Like, what are you gonna get out of that? And the same, I owned Millennial Precious Metals because they had, good exploration, a good exploration story, but they had the problems like, okay, we don't have a huge development project, and we obviously need to finance as well. And then you had Integra with Delamar, which was a very large project, but the same thing. It's like they needed, in a sentiment that just got worse and worse and worse, they're advancing it through, what Lassonde would call the killing fields, the development, the bottom of the Lassonde curve. That's not too exciting for a lot of people. Okay, so they were in this death spiral basically of dilution. Florida Canyon might fix that for both Nevada North and for Delamar, and obviously if you want to reinvest some in Florida Canyon mine. So this might be the best merger. If this works out, this might be one of the most timely mergers I have ever seen, because the synergies are just obscene. You shield the entire entity from dilution. You have the cash flow with being worth more than it is at face value, because they have very good areas to put that cash from Florida Canyon. If they de-risk, if they drill up, 50% more resources at Nevada North, I think that probably gets a lot better. they advance Delamar. Maybe they drill up some other stuff. Maybe that adds whatever, a lot of value. So it's like, I think the cash flow is gonna be worth more to Integra than it is in actual money, if you know what I mean. Magna Mining, there's a SCP equity research with a paper. You can find that in Doc Jones have posted that in the forum. Target price $0.6. Who knows how they came up with that? Market cap, it actually had a good day today, and PF has posted some really nice pics. I mean, look at you can kind of tell that's that's ore. Look at the surrounding rocks here. It's like dark, a lot of sulfides and stuff. So that stuff is probably worth a lot. Yeah, I mean the kind of, I guess, the sad thing for Magna is simply that, okay, nickel prices sucked ass. Not their fault. They started sucking ass here. But obviously nickel prices, I think, are closer to a bottom than to a top. And what I like about Magna, on the whole empire building theme, I mean, they have a legit plan. They have 2 deposits right now, which probably, I mean, both are pretty much permitted, so those probably are going to get into production. They want to make an acquisition soonish, I think, or trying to make an acquisition soonish. Imagine if that's on par with, Green Hill, and Jason has stated that, okay, we're hoping for to be a 3 to 5 mine producer in Sudbury over the next, let's say, 5+ years, 3 to 5+ years. Imagine nickel prices turning around, sentiment turning around, and they're able to execute on that plan. That could very much be trading for a couple $2 billion in 3 to 5 years. That's why I don't touch it in the HODL folio. It's like the super competent people trying to build an empire, and it's not just some whatever. It's not just, we want to build an empire, but it's like these guys have done it before. They are experts at this. They're experts at exploring in Sudbury. They're experts at mining in Sudbury. The CEO lives in Sudbury. I think a lot of the people live in Sudbury. So it's like, this is Jason's child, company child, and he wants to build a mid-tier nickel producer. So it's like, this one is like, it's such a good case that it's like almost that you don't care where nickel is trading at, in a sense, because it's a matter of time when nickel prices get rolling again, and they got palladium and platinum, and I mean, they're probably closer to a bottom as well. They have gold credits as well. I think they have some cobalt, yada yada yada. So they have a bunch of stuff. It's not just nickel, that's the thing as well. But yes, platinum, palladium, nickel has been bombed out. But you can imagine if they get into production and those metals have turned around and they're, pushing towards becoming let's say a 3-mine producer. Yeah, super exciting. This is, I think, one of those stories where it's like, maybe the best course of action would be like, okay, you lock away the shares for 5 years so you don't get too tempted to trade, let's say, and you come back and you're up 5 to 10x or more. I actually do think that, because again, I've said this before, the only way to capture alpha, if a management team is superior in terms of value creation, they create more value than they destroy. The thing that correlates with expected returns is time held of a stock. And I've given this example before. Let Michael Jordan play 1 second in a game and he's not going to change the outcome. Let him play 100 games in a row, over whatever time frame that is, how many hours. He might make that team, I mean, depending on what kind of league it is, he might make that team he's playing for win every single game. and win more and more basically. That's the thing. It's really time held because these guys on average create value and solve problems. They if we take today and fast forward a year, they would probably have created more value or a lot of value and solved a lot of problems or hurdles or challenges. If you fast forward 2 years, they probably will have created more value, solved more problems, overcome more challenges than they did in 1 year. So you would expect that the value in 2 years would be higher than the value in 1 year. So if I buy it today, I would expect to be up in a year. I would be expected to be up even more in 2 years. I would be expected to be up even more in 3, 4, 5. That's the growth. That's the value creation growth curve. That is, in my opinion, the simple bet when management is superior. And of course, you have the added benefit that, okay, we know that nickel sentiment is absolutely in the trash, so just a change in that could frigging give them a multi-bagger without creating even more value. So you have you have some, well, there are headwinds now, but they're going to turn into tailwinds later. Last one I thought I would talk about is Vior Inc. I think this is actually an interesting case. I met them in Deutsche Goldmesse, Frankfurt. They have a market cap of 28 million. Osisko Mining, which some inside by my CEO. Osisko Mining, compensation for property, yada yada. So Osisko Mining owns, I guess, like 50 million shares. Owns a huge part of Vior. They are also the ones that vended the project to Vior in 2020, I think, an optional agreement. Now the thing is, of course, that Goldfield just acquired Osisko Mining. So it's going to be Goldfields that I assume that takes over this position unless they, whatever, have some kind of deal with Goldfields. It's like, okay, we're going to, because the thing is, what is the Osisko Mining team going to do? We don't know. Anyway, the interesting thing, I think, they've raised a shit ton of money. They have like 21 million or something. They have been planning a 60,000 meter drill campaign on their Belletier Gold project in Quebec. It seems that they might not yet have the permits. So that's, they were expected, I think, to get going in June. And now it's, latter part of August. I don't know what's that about. I have no idea. I assume that's the case. We haven't seen any news release about them drilling. So I assume they simply don't have the permits. And those fat financings, I think they just became free trading at, I think the price was 12.5 cents. So today, for example, you see huge volume, 84 million shares traded, down. And it actually had been trending, it went up to 13 cents. It actually went down to 0.105 on heavy volume today. So I assume that's someone from the placement, selling whatever. Or it might have to do with, they're not drilling, so I'm selling out, something like that. I don't know. What I do know, again, is that they should have around 21 million in cash, enterprise value of 7 million. A project which the Osisko Mining guys obviously felt comfortable throwing a bunch of cash at, and they were able to get other people, because I don't think Osisko did the whole financing, but they were able to attract $20 million in cash when they had a market cap of 15 million, I think. And as we know, Osisko Mining is pretty much the kings of brownfield exploration, let's say, in Canada, or at least I think this part in Canada. They did it with Canadian Malartic. That was a past producing mine, I'm pretty sure. They saw something, drilled it, created one of the largest gold deposits in Canada. I think the Windfall deposit, which they just sold to Goldfields, was a past producer as well, which they, okay, yeah, we think this has legs to depth. So that's a high grade mine that's proven to go to, I think, around 2 kilometers or something, somewhere along those lines. I think 7.4 million ounces on the books. Okay, what is this? Belleterre Gold Project. Well, it just happens to be historic mines. 800,000 ounces of gold production, 10.7 grams per ton. That's like, excuse me, that's like windfall type. And here you can see the drilling. Not a lot of drilling. They drilled some holes as well. I looked them up. Not super impressive holes, actually. That was, I think, in like 2021. So this big bet from Osisko and some other companies. I mean, yes, it might not be huge given that Osisko had a market cap of $1 billion, but it's like I don't think they throw around money that easily, and then they were able to get people to throw up, even more money, so they get up to 20 million. I mean, I think there's a good reason why Osisko and other entities were comfortable forking up $20 million so they could go on a 60,000 goddamn drill program. And yeah, the thing is, I mean, I looked into this. I watched some presentations. There are not too many presentations out, but there are some with the CEO. And it's hard to find a lot of information on the Belleterre Gold Mine. Maybe it was so old that, I don't know, there's no real drill core logs or something like that. I don't know. They obviously seem to have some holes here, but whatever. The thing is, what seems to be the thing is that this is cross-section west view, so that would be north to the, so I think it's looking that way, and well, here you can see some, okay, that's not the one, yeah, west view is looking that way. Look how they have projected vein number 12. I assume that's one of the more productive veins, let's say. Here you see potential stacked veins. And the CEO talks about, how they flatten out basically. Here, for example, it seems that, drifted out here along this vein. It seems they drifted out here along that vein and all that. Same here, basically. So it looks like there might be a stacked vein system. The interesting thing, I don't know if they missed that, old timers or the past drillers or explorers, whatever. Because as far as I understand, 95%, according to the CEO, 95% of the drill holes were drilled like that. And I looked up a previous news release when they drilled these holes. They seem to have had the same orientation. That they go from, what would that be? I guess south to north. Like that. And he talks about, well, they probably undercut veins. I mean, if you drill like that, you might hit this, might hit that again, but it's like maybe sporadic hits. But you missed all of these other ones. So the plan, as I understand it, is that, okay, they think this is what's going on here. And they would turn the rigs 180 degrees around and drill like that. So they would potentially hit multiple veins in one drill hole. Then it could get fun. Assuming their thesis is correct, and again, this happened, or I should say, if you looked at what they drilled here with a few holes, not that impressive. But again, if they had the same drill orientation as everyone else, and let's say a few years passes, those Cisco guys get involved because they own the project, and they figure out like, hey, I mean, it looks like there's some correlation to felsic intrusives, I think, and they're going like that, and then you have these potential stacked veins. Oh, everybody's been drilling the wrong way, basically. And then they put in a lot of money. That's what appears to have happened. That Vior and I assume help with Osisko got kind of a eureka moment. Like, they've been, I think they've been underground and all. That's like, oh Christ, I mean, everyone's been drilling this the wrong way. They're actually trending like this, and everybody's chasing him the same way, or this in the same, drilling parallel basically, instead of drilling like that. So I think again, you just look at the price. Okay, 21 million in cash. So you're getting a project and their entire portfolio, including shares of Ridgeline, which had a nice news release out today, for 7 or 8 million CAD. A project that produced 800,000 ounces of 10 grams per ton gold, where those Cisco mining guys seems to be very enthusiastic and convinced them to like go big, 60,000 meters. So it's like, assuming they get to drill 60,000 meters, with this race, and if they drill these holes, and they're going to do some greenfield exploration as well, they can kinda somewhat prove up a case in one season, if they're allowed to drill. In one 60,000 meter drill campaign, I mean, if they hit them, because I think they're going to do like, almost like what they said, delineation drilling, like 100-meter spacings. If they get favorable results, you could, I think, kind of start to infer, it's like, hey, it's like there's probably 1 to 2 million ounces here. All of a sudden, that would be kind of a, again, after one race and one drill campaign, those 60,000 meters, this could be, who knows, maybe one of the more interesting exploration plays out there. So yeah, I mean, going back to, I don't have a problem finding buys. I mean, stuff is just super cheap. I mean, one would have to think it's a no-brainer. But still, it's not, again, compared it with Integra, where it's like, yes, this has lower market cap, obviously. But enterprise value is super cheap. But you don't get a gold project for free here. You get their entire portfolio for 7 million though. And the possibility of having one drill campaign, one field season proving up that, I mean, they basically go from, this looks really good to, we have another high grade deposit here, because, I mean, look at the 6 to 7 kilometers of prospective ground. So this might become a big thing. But you still take that if risk, because there's still no guarantee, even with this new appreciation of how the veins might be orientated, there's still no guarantee that you're going to have a gold mine here. But still, it's one of those exploration stores that, like, yeah, okay, I mean, you can't get away from the fact that it's just ridiculously cheap, and you have, some of the best Canadian explorers that like this project. So it's like, that's got to count for something. So yeah, it's just a buyer's market out there. It's just absolutely crazy. And what I'm not going to say hope, but yes, it would kind of suck if for some reason they miss this entire season because they don't get permits, or maybe it's something to do with the wind, what are they called? Goldfields guys that, hey, we're taking this position now, and then we want some, things done another way. I have no idea. So there's a chance, I guess, a risk that's like, okay, they might not be able to do any drilling this year. Then, of course, it's going to be very boring, right? That's a possibility. That might be why people are selling. Might be that plus the fact that they have, the shares just got free trading. A bunch of shares got free trading. But this is one, is like, I might not, be too inclined to chase this right now. But I think this is one worth watching, and like kind of hoping that, there's some selling here. Because let's say it goes down to 10 cents or something. So that's 23.3 million in market cap. Then you almost get everything for free. You basically pay yourself back with cash. So again, it's like, I'm not super excited by, I mean, this is obviously cheap, but it's still an if story, because they don't have a resource. But I think these are stuff that's like, hey, I mean, I don't have a huge position in this, but it's like I can't help myself. It's like Pokemon. Gotta catch them all. I was gonna say. So if I have a 0.2% position in Vior, for example, I don't think I'm making a mistake. Far from it. But still, yes, I would prefer at least the bulk of my money to be in the more developers, because again, at face value, this is obviously super cheap with some headwinds right now. But at the same time, you have like in the gold space, you have Integra, where at face value you literally get 2 drilled out deposits in the US, not too far off from production, relatively speaking. So it's like, which one is actually cheaper? Hard to say. Hard to say. Here you got 2 projects for free. Here you got a very, very good, almost, well, a very, very good exploration target almost for free, plus all the other stuff. So it's like, yeah, it's a buyer's market. This is the stuff that keeps me up at night, because I cannot believe my eyes. Like, when this sector goes into a downturn, sentiment bottoms, like every opportunity is the best they've ever been. But every story, when they all get cheap at the same time. So you're just sitting there. It's like, obviously I don't have unlimited money and I'm always 100% all in. Well, kind of, pretty much. So you're just sitting there. It's like, Jesus, I want to own this one. I want to own this one. I want to own that one. It's like, I can barely look at a decent to high quality junior and not like, oh, that's a buy. I mean, I could probably go through a whole list how you should probably end up making money on a bunch of ones. It's just absolutely crazy. That's what's driving me insane, because I'm just comparing all the cases all the time. Like, okay, which would I rather own? If I had to choose, which I have to. Oh, yeah, anyway, I might generate some ideas at least. And it's like, again, now is not the time to, I think, bet everything on a few stories. I mean, personally, I have a few that I'm very deep in. And that's my decision. I wouldn't recommend that. I think diversification is, again, around peak merit, but I sometimes can't help myself when I find something that's like a no-brainer within no-brainers, kinda. So I just, I'm in a sense, that's a bit greedy. It's like, if you think someone has like, oh, this has pretty much no downside, 500 plus percent upside, and then you have 10 others with like pretty much no downside, except for price, let's say, but it's like a limited downside, or it's like improbable downside with 400% upside potential. I mean, it's not going to be a big deal if you have 11 of those stories, spread equally. But it's like, yeah, sometimes I can help myself. It's like, oh, okay, I take a much larger position in the one that's like, okay, expected returns of 500% instead of 400%. But maybe that's a bit greedy. It's like, who knows? I mean, if it works out, I'm going to look smart. If not, it's like, okay, I'm probably going to feel like I was a dumbass and too greedy. I'm just saying. And the best thing, of course, then is like, yes, I mean, I looked at one of the hodl folios today, for example. I mean, Magna did well, for example. We had a red day today in the markets, and the metals, that portfolio was down like 0.34%. So it's like, who cares? But obviously, if you would have been all in Magna today, you would be up 10%. And that's what, really kind of gets people attracted. But let's not forget, when this sector turns, everything will turn. Everything, but it's not all the companies aren't gonna go up the same way every single day. Anyway, yeah, talked a long time already. I think I'm up to a long time. Whew. Okay. Hopefully you found some value in this. Thanks for listening. Consider me biased. This is not a buy or sell recommendation. I own shares of probably every company I mentioned. Some are banner sponsors. Not investing advice. Assume I might buy or sell shares at any point in time. That's the thing. Is like I can find something that is an obvious no-brainer. Take Vior, for example. It's like, oh, I own it, it's an obvious no-brainer. But then, let's say I find something that's even cheaper, and Vior is the one that I find, the one that's, how do you say, less cheap, the least cheap out of all the cheap ones, let's say. Then I can say, okay, then I might sell and put the money in that one. Not that Vior is overvalued, but simply that I found something even better. But I would be probably, happy staying where I am. Or the opposite happens. Let's say Vior goes down to 9 cents or something. And it gets obvious that, they're not going to be drilling this year. So it's basically, the project gets trading for free. Maybe I'll sell something that I've talked about in this video because, okay, now I think Vior actually, since it went down 30% in price or 20% or whatever, all of a sudden the risk reward in that jumped up so much that the other no-brainer actually looks less of a no-brainer relatively speaking. I mean, the opportunity cost went up. So I hope you get my idea. So it's like, again, this is not a buy or selling recommendation. I talk about stories which I think are interesting right now, or might be buys, or in my opinion, or looks interesting, or whatever. I don't know what I'm gonna make on any one of these companies. I have no idea what any of these. I think many of those I've talked about have 10-bagger potential over the next 3 years. But I have no idea which ones are going to deliver that. I don't know if any are going to deliver that and all of that. And maybe if I find something even better, maybe I'll sell that. Because that's the only currency I have when I'm all in all the time, value shuffling. Nothing happens in the moment, but in the long term, if you are concentrated in the cheapest stocks, that's obviously, you're expected to make more money. So thanks for listening. Bye bye. Have a good day. Hit the thumbs up and stuff if you like this stuff. Bye bye.